Okay, before I begin, I want to make this very clear. This is a beginner's guide to how to invest in the stock market, even if you have no idea what you're doing. You don't need to know practically anything to do what I'm about to show you in this video. I don't want you to go through a portion of this video and think, I don't know what the hell I'm doing, and I don't really know anything about the stock market. This is just not going to apply to me. I promise you, if you make it to the end of the video, I'm going to explain step by step exactly what to do, how to invest in the stock market, and what to buy. And once this video is over, I pretty much guarantee you, you'll probably be able to get started investing in less than 30 minutes. Probably a little bit less than that, actually. What I'm about to show you in this video could make the difference between you retiring at 40 or working the rest of your life. Of course, that's all subject to if you actually do this. What I'm going to be showing you how to do is investing in the overall market, and what this means is that you can invest in these funds and let them sit there and do absolutely nothing with them and just let them grow throughout your lifetime. This requires virtually no work, and pretty much the only way that you can mess this up is if you overthink it and put too much work into it. What I'm about to show you, spoiler alert, this is index investing, is the safest, easiest, least stressful, and most profitable way of investing your money out there. You could argue that real estate investing is more profitable, but nonetheless, my point still stands. Again, you can do this as a complete beginner, knowing practically nothing, and do just as well as experts on Wall Street. Well, what's the upside to this? If you had invested $10,000 into the S&P 500, which is VOO, in 1980, that investment would be worth approximately $281,000 today. The power of compounding returns is absolutely insane. Let's extrapolate that out another 10 years. That $10,000 will be worth approximately $730,000. In my opinion, if you're going to be living another 20 years and you don't need passive income right now, these are some of the best investments that you can make outside of real estate and investing in yourself. And on top of that, the greatest part about this is that it requires virtually no effort whatsoever. I know this probably sounds like a scam or some stupid ad on YouTube, but I promise it's real. Just wait till the end of the video. I'll explain everything. Just to give you an idea of how powerful index investing is, this method of investing has outperformed 94 to 97% of mutual fund managers. These are the people that we consider the experts on investing. This means that a majority of the time, if you just simply invest your money in an index fund, which I'm going to explain in a second, you can beat most experts a majority of the time. Just to clarify, this is not a how to invest in individual companies video. Investing in individual companies requires a lot of research and understanding if you're doing it right. In fact, Warren Buffett, one of the greatest investors of all time, actually suggested that a majority of people should stay away from investing in individual stocks. He even followed that up with suggesting that people should invest in what I'm about to show you, which is the S&P 500. All you do with these investments that I'm about to show you is sit back, let them grow, and go about the rest of your day. The best thing to do with these funds is literally just don't touch them. As long as you're buying and holding for the long term, your likelihood of actually losing money is extremely low, and I will give you actual statistics on that in just a second. To explain how to do all of this, first I'm going to set up a brokerage and show you step by step how that's done, and then second, I'm going to show you which index funds I think are the best for you to invest in and give you a little bit of context behind each one of them. This is so you can properly choose which one works best for you. By the way, the term brokerage is just a fancy term for an institution that you buy investments through. Investments like stocks and index funds. In this case, I'm going to use a very popular and completely free brokerage called Robinhood. I'm assuming like 95% of the people that are going to be watching this video have heard of it. Keep in mind, you can set up whatever brokerage you want. It doesn't matter to me. And then finally, I'm going to be explaining what you should be doing with these funds and what to expect from them at the very end of the video. Okay, to start, I'm going to show you a quick tutorial about how to set up a brokerage account with Robinhood. Again, there are many options out there. You don't have to use Robinhood, but the reason that I'm using Robinhood is because it's very easy to use. The interface is extremely simple, and I don't think that we really need all the extra data and graphs, and then on top of that, it's trustworthy, and I'm very familiar with the platform itself. Again, sign up with whatever brokerage you want. Okay, because it felt like every single one of my friends already had a Robinhood account, out of the kindness of her heart, my amazing mother volunteered to set up a Robinhood account as an example, and because she wanted a free stock. So first, open up the App Store, search and download Robinhood. If you want to, use the link down below in the description. You would get a free stock and I would get a free stock, and you would help support this channel, but again, you don't have to do that. In the scenario that you do want to use that link, make sure to click that before you open up the app. That way, once your account is set up, your free stock will be waiting for you. In this case, it's actually in my texts, but for you, down in the description. So click the link. It should open up the Robinhood app. Welcome to Robinhood. Sign up. Click on where you're from, your email address, then create your password. Then enter your legal name, then your phone number, then your date of birth, your residential address, And then finally, your citizenship. Keep in mind, if you're not a citizen of the United States, all you need is a valid US visa and a social security number. So click continue, then enter in your social security number. Then how much experience does my mom have? None. Is she employed? Yes. Enter in the employer and the job description. Does a family member own 10% of a publicly traded company? No. Does a family member work for a brokerage based in the United States? No. Then you read through every word of all of this important stuff. Then you click continue. Then fund your account, so link it to your bank. And now I show you my credentials to my bank account. Application submitted. Congratulations, you've officially set up a Robinhood account. So now you're on the home page. Click on get your free stock. Just click one of them. Scrub it off. And of course she got a $13 stock. Okay, so go back to the home page, go to search, type in QQQ, which is one of the index funds I'm about to show you at the end of the video. Click buy. You can either buy in dollars or you can buy in shares. To do that, click at the very top, click buy in shares, but we're gonna go back to dollars. I'm gonna type in 10, swipe up, and congratulations, she now owns $10 worth of QQQ. So now you can go back to the home page, scroll down, and you can see she now owns 2 stocks. Okay, now I want to talk about what I recommend you invest in as a complete beginner. Again, investing in individual companies requires a lot of research. It is not passive, and you have to truly understand the companies that you're investing in. And in general, I feel like a majority of the population shouldn't be really gambling their money on something that they truly don't understand. In general, I'm going to make videos about how to do that in the future, just not in this one. Again, my goal for this video is for these investments to be completely passive, and I want you guys to have to do no work whatsoever, other than set up the account. To do this, I'm going to list off some of my favorite index funds that I think that will be around basically forever. I'm going to give you some background behind each one of these, and then also kind of give you an idea of which one you should be buying based on your risk tolerance. First, what is an index fund? Basically, what is this random dude on YouTube telling me to invest my money in? Buying an index fund is basically buying hundreds of small pieces of different companies or stocks all in one. It gives you the ability to diversify your portfolio very, very quickly. This is a great thing because what it means is that you're basically hedging your bets. To put it into simpler terms, here's an example. Let's say that you have 10 companies. Well, one's really struggling and it even goes under, meaning that price goes to zero. You've lost all your money in that single company. Well, you've got another 9 to hold up the rest of your portfolio, and in the end, most likely the remaining 9 will end up making you money. Typically, these index funds are tracking a specific index within the market. All this means is that these funds are just trying to replicate the performance of a certain area within the market. For example, SPY's index is the S&P 500. OGIG's index replicates the performance of internet and internet technology companies. IXC's index replicates the overall performance of energy companies worldwide. IHE's index is the US pharmaceutical industry. There's pretty much a market index for any industry that you can think of. All it requires is a quick Google search. The index funds that I'm going to be recommending to you in this video are going to be replicating the performance of the entire United States. One of them that's not so true, it kind of leans towards one industry, but I'm giving you options of what to choose from. Again, the reason that investing in the entire US and buying hundreds of stocks across the market is important is because, again, it makes it so that it's completely passive and it requires no work on your part. With the majority of my audience being on the younger side, what this means is that all you have to do is hold on to these investments for 10, 15, 20, 30 or more years. Your chances of losing money are extremely low. I reference this statistic in my videos a lot, but that's because I think it's very important to understand. The overall market has never dropped in any 15-year period. What this means is that if you had bought a broad market index fund like VOO and held onto it for 15 or more years, at no point in US history would you have lost money. I recommend slowly but surely putting your money into these investments and letting it grow over time rather than just getting eaten away by inflation. So what investments should you be buying in your new brokerage? The first index fund that we're going to start with is VOO. This is an extremely popular index fund that I'm assuming that a lot of you actually already know about. This tracks the S&P 500, which has existed since 1926, and it simply tracks the largest 500 companies within the US. This index has actually been used to judge the overall health of the market for years. When you buy into a fund like VOO, in reality you're buying companies like Apple, Microsoft, Facebook, Amazon, Google, Johnson & Johnson, Berkshire Hathaway, P&G, Visa, and another 491 companies. Its top 10 holdings make up approximately 27% of the fund. Put in simpler terms, it's pretty well diversified. Your chances of losing money on this is virtually nothing. In fact, here's a clip by Warren Buffett, the greatest investor of all time, recommending the general population invest in this exact fund.
In terms of the index fund, I would just take a very broad index. I would take the S&P 500.
And I pointed out that if you put $10,000 in an index fund that reinvested dividends, and I paused for a moment to let the audience try and guess how much it amounted to, and it would come to $51 million. Now, you didn't have to worry about what stock to buy. You didn't have to worry what day to get in and out.
I would say that if you want a moderately conservative approach to investing without too much fluctuation, this is the way to go. The second index fund that I'm going to recommend is VTI. This tracks the total US stock market. This will include companies small and large all the way across the country. It strives to not have a bias towards any specific size, industry, or investing style. In reality, when you're buying VTI, you're buying a lot of companies that are held within the S&P 500, but even more diversified. The top holdings again include Apple, Microsoft, Amazon, Facebook, Google, Johnson & Johnson, Berkshire Hathaway, P&G, Visa. Its top 10 holdings make up only about 23% of the entire fund. What this means is that it's extremely diversified. I don't think that I'm really going out on a limb saying that this fund will always exist. I would say that if you want a very conservative approach to investing and you're interested in buying companies small and large across the entire United States, that VTI is the way to go. And finally, this is for people who are ready for an emotional roller coaster. The third ETF that I would recommend is QQQ, commonly known as the Qs. This tracks a very modified version of the NASDAQ 100. This fund only invests in non-financial stocks, and it has a pretty heavy lean towards the tech sector. Keep in mind that this is not actually a tech fund though. I believe that this is a safe investment, but it is much less diversified. What this means is that there's a chance for very high returns, but the highs and the lows are going to be very high and very low. You need to be emotionally strong enough to see this and not sell when it happens, because I guarantee you this will happen at some point. Its top 10 holdings comprise almost 58% of the fund. These holdings include Apple, Amazon, Microsoft, Facebook, Google, Tesla, Nvidia, Adobe, and Netflix. Basically, a fund like this has higher risk, but the upside is much higher. But again, just like the other funds, even with this higher risk, I still think if you're holding on to this for the long term, you won't lose money. So now that you have an idea of the three options that I recommend, I pretty much guarantee you, as long as you're holding on to one of these three for the next 15 or more years, there's almost no way that you lose money. And the way that I say that sounds a little bit doom and gloom. The way that I should say it is that I'm betting that you're going to make a lot of money off of these investments. And in return for making you a lot of money, you should tap that subscribe button. And finally, I cannot stress this enough. Once you've bought these funds, do not sell. Do not try to time the market, do not sell. Basically, you can't lose this game as long as you're buying for the long term and don't freak out. Again, these funds statistically are more likely to actually give you a higher rate of return than most experts are able to achieve. And on top of everything, they require almost no research or work whatsoever. In my opinion, it really doesn't get much better than that. So basically, in review, all you guys need to be doing is buying, holding, buying, holding, buying, holding, buying, holding. And eventually, when you're rich, you can come back to this video and thank me. Keep in mind, you're going to be experiencing highs and lows in the market. Just the key is slowly over time, invest your money no matter what's going on. When the market hits all-time highs, just continue to put money in slowly but surely. And when the market hits all-time lows, just buy extra. Just don't try to time anything. Trying to time the market has been proven time and time again that it just doesn't work. This is a very overused line here on YouTube, but there's a reason why it's overused. Time in the market beats timing the market. And I truly believe that to be correct. I really hope this was a useful guide on how to start investing in the stock market as a beginner. Again, the only reason that I used Robinhood as an example was because I'm very familiar with it, and on top of that, it's a very popular brokerage. Use any brokerage that you want to. The only thing that I'll say is whatever brokerage you sign up with, make sure that they're commission free. So as you guys make and save money, I would recommend taking that money and buying these funds slowly over time and letting it grow throughout your lifetime. And finally, I'm not a financial advisor. This is for entertainment purposes only, aka I don't want to get sued. Thank you guys for watching, and I'll see you next time.